The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the August 27th, the wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. And let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know that I'm absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email. Send it off early. Send it to steve@tfnn.com. Inside the subject heading, please put radio show question. And, of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. A slightly mixed bag out there. The mix is really coming from one area. That's the semis. They're down about 14 points, about 0.25%. Other U.S. indices are trading to the upside. Dow's up 131 points, about 0.25%. 0.2 for the S&P, or 11 points. Basically flat for the NASDAQ 100, 8 points there, 11 points for the Russell. That's a 0.5% move. Transports are up 22. Semis, as I mentioned before, they're down 13 points. NASDAQ Composite up 24. New York Stock Exchange up 8. The chart I've got up on my screen right now is Microsoft. I have that up because there's the potential for a TD9 count bottom pattern to confirm today, complete tomorrow. In order for it to confirm today, we need to see a close below 504.24. Right now, we're trading at 503.89. We are still trading below daily support. Daily support is 503.44. If there is a rally that ensues and price finds resistance at 508.47, that is where a counter-trend rally would come to an end. If Microsoft is able to close above that, that says there's something else going on. That something else would then at least target profile resistance at 514.53. The weekly time frame chart does not have a topping pattern, at least not one that I see. Maybe there's an A to B equals CD pattern out here. I'm not going to spend the time to go figure that out. What I can share with you is price is pulling back in its testing, or it's pulling back into its buy zone. The buy zone for Microsoft is between 489 and 505.69 on a monthly time frame chart. A bearish reversal candle at month's end, that would be on Friday, 2 days from now. Right now we got a dark cloud cover, so if we don't rally, that candle formation will go ahead and stay. That would generate a monthly Rhodes Momentum Indicator top. So you'd have a top on the monthly, the weekly, not so sure just yet. And I do not have a topping pattern per se on the daily time frame. So we've got a bottoming pattern. So really quite interesting charts. Now, if you look at the 30-minute time frame chart, you can see that price rallied right up into its TD9 count breakdown resistance level, and that's at 504.45 out there. So we've got, and earlier when I put this chart up, what price was doing on that weekly time frame, in essence, was running into oscillator and change line resistance. So watch Microsoft again. If we get a close above 504.24, the daily pattern goes away out there. Is there anything else for me to take a look at here? Not on a daily signal basis. So let's do this. Let's go take a look at the New York Stock Exchange, the Advanced Client Oscillator, Spot VIX Index. So the New York Stock Exchange Advanced Client Oscillator, left-hand side, it's calculating the difference between the 19 to 39 period exponential moving average of the advanced decline line. We had a new all-time high in that advanced decline line just a couple of days ago. So there is plenty of market breadth for this rally. If we take the New York Stock Exchange on the left-hand side, it needs a bearish reversal candle to confirm a Rhodes momentum indicator top. If you look at the panel below, that advanced decline oscillator, it is above zero. It provides buyers with an edge. If you look at the spot VIX index, it continues to trade below its 50-day X minutes moving average. That also provides buyers with an edge out there. So as we come into the Labor Day weekend, it's Wednesday, we got today, tomorrow, and Friday out there. Obviously, we're closed on Monday. What is the signal? So what I can't say with regard to the spot VIX is that we have a higher low reading. We don't. Yesterday closed below the prior day's close out there, so we don't have that, so to speak. We do have higher bottoms, though, but just one day. Yeah, so there's not much more that I can take from that spot VIX index. So what else can we share with you? Well, if we take a look at our seasonal chart for the S&P 500, here is the Labor Day holiday over a 97-year stretch. Now, my presumption is that the vertical line that we've got out there is actually Labor Day. So this shows us, as of, in essence, Monday, 10 days prior how the S&P 500 is traded, and 10 days post. If we take a look at, so this would be Monday, so it'd be Friday, Thursday, Wednesday, where we're at right now, Monday, Tuesday. So did we have a down day? Yes, I can't remember. In any event, what this is suggesting is that we could rally or should rally into the weekend out there. So that's over a 97-year period of time. But then once we get there, it looks like to prepare for a decline out there. That's the 97-year seasonal cycle. We can put up 25, it's most easily I could put up 25 years now. That's a schizo chart, right? So anyways, seasonally speaking, that's what we're taking a look at over a 97-year period of time. Over a 25-year period of time, we basically wouldn't use that information. What do we know here on this set of charts? Right now, buyers are the ones that have an edge in the marketplace using these two tools out there. So do they have an edge? Well, let's go take a look at the 4 daily equity future contracts. So let's start here on the upper left-hand side, or the left-hand side, you're going to see the ES Mini. Right now, price is trading above its perigee pivot point at 64.8975. We've got Apogee that comes in on Wednesday, a late morning out here, but if price is able to close today above 64.8975, it would suggest a run up towards its oscillator and change line. And that's at the 6,501 level. We had talked about the NQ closing back inside its daily profile. As long as it closed the day above 23,551, it likely wants to make a move to its oscillator and change line around the 23,776 level. In the case of the Dow Equity Future contract, all morning long it's been trying to make this new profile. It may hold. This new profile is below price. When we have a new profile that forms below price, that is a bullish message out there. That doesn't mean that price can't pull back into the profile. And if it does, the first level of support will be at 45,242. But right now, the Dow Equity Future contract is trading above profile resistance and its green oscillator and change line. Without a topping pattern, it's likely to rally further out there. And finally, if we take a look at the Russell 2000, the Russell 2000 also trading above profile and oscillator and chain line resistance. It's trading above prior highs out here from just a couple of days ago. Day number 2 of a rally. No reason for the Russell 2000 not continue its rally. Now, these are just the daily time frame charts that we're taking a look at. If we poke our head and take a look at the intraday chart here real quickly before we go to break, that wasn't it. So I was going to try to do that, and I hit the wrong tab. So that call is now off. I meant to hit this tab. In any event, we'll be back in just a few. Steve Rhodes with TFNN.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. So we didn't get to the intraday charts out here, but I put up the most important intraday charts, at least at this moment in time. That's the 2-hour time frame charts, which the ES, the NQ, and the Dow each formed TD9 count tops earlier this morning. The ES mini, now the bar that we're in right now is going to complete at 12 noon. So we've got still, under 40 minutes, 32 minutes out here. No, in any event, if price closes above, the ES mini, I should say, closes above 64.89, we're at 64.92 right now. That's going to increase the odds of a further rally. In the case of the Dow equity future contract, price already closed above its TD9 count top, so it wants to rally up to 45.766. The Russell 2000 never got in that game. It did not have a TD9 count top. Bar number 5 was the high of that pattern out there. That's why it didn't have it. And then finally, we come back to the NQ. The NQ is the weak link out here. But price is running right up into resistance right now. If price can move above this area, 23,596, we're at 23,598. If price can move above that level, it should go target the TD9 count top. And if price can close above 23,629, it'll negate that signal and also suggest a further rally. So with regard to the NQ, it's really going to be that TD9 count top. That's your resistance level out there. Again, 23,629 is the number. All right, so Steve is going to close these charts down. Then we're going to go take a look at some requests that have come in. The first one that we're going to take a look at actually came in yesterday afternoon. I overlooked it. It was from our man Al inside the production department. Of course, at that stage, I was asking for requests out there, and he was kind enough to throw one in. I just didn't see it. But I thought we'd put this up on our screen anyways, because everybody's been talking about it. And what is that? That's Cracker Barrel out there. Nothing like a good piece of ham from Cracker Barrel. If we take a look at it, interestingly enough, this had already formed a TD9 count bottom. It formed that TD9 count bottom back on August the 6th out there. Then that ad came out, and that TD9 count bottom was tested and rejected. It held. The TD9 count breakout level at 53.06 held out there. Prices traded above the top of its bearish structured profile. It's trading into a swing point from back on the trading session of August 15th. That had volume of 665,000 shares so far today. This has done 1.9 million shares. Price is going to go test that high high, that high being 63.61. If we close above it, the next move for Cracker Barrel will be up towards 67.64 out there. So Cracker Barrel on the monthly chart is above resistance. On the weekly chart, it's traded with inside its profile out there. The top of the profile is at 69.93. So that first battle is going to be that swing point from August the 15th. Again, close above that, increase the odds of 67.64. You close above that, then we'll be looking at 69.93 out there. So although the stock took a hit, it took that hit with that Rhodes Momentum Indicator top back on July 24th out there. So, in any event, that's what's going on with Cracker Barrel L. Thank you for that request. Greg from Portland wants to take a look at Eli Lilly. LLY is a ticker symbol out here. Eli Lilly. So, the question was, has this formed an A to B equals CD pattern on the upside for the daily time frame? I believe that was your question, Greg. And if we take a look at the retracement, by retracement I'm referring, starting at the low of August 8th, moving to the swing point that formed out here on August the 22nd. That retracement shows that the decline from 3 days ago now was only a 23% retracement. Although that is technically, I suppose, a Fibonacci number, it's not really the one that Steve... I look for to see if we have a 0.382 retracement. If we don't have a 0.382 retracement, and not that this can't go and extend itself, but is it really a qualified A to B equals CD pattern? Stevie says no. That doesn't mean that it's not going to rally. But what price now needs to do, so we know that it technically speaking, I'll say no. Larry might say something else out there, but I'm just going to go with what Stevie says and what Stevie has learned over the years out here. Now, if we take a look at what Eli Lilly is doing, it has rallied right up into its breakdown level. Now, it's not the TD9 count breakdown level that I normally refer to. This is the gap down breakdown area out here. So on the trading session of August the 6th, the low out there was 740.19. There were about 4.7 million shares that traded that day. The very next day, it gaps down with 26 million shares. Price is just simply filling that gap. And in essence, it has done that today. David White required a close above 740.19. Stevie just requires getting up there and hitting it. So resistance has held. Now, I know that you're long this. So the first thing you're looking to see, if can today close above 740.19. If it doesn't, it just says be careful. If you look at the weekly chart for Eli Lilly, not that I have a bottom pattern out here. What I've got is a bounce. And that bounce has run right up into resistance, the weekly oscillator and change line. The monthly time frame chart, longer term, looks pretty good. And what I mean by that, this formed a TD9 count top. It also had a Rhodes Momentum Indicator top that was thrown in there. And price did find support at the bottom of its profile, 682.99. Its work to the downside may be done. How will we know? Well, we would know because the daily time frame would start taking out resistance levels. And that first resistance level is going to be 740.19 out there. So that's what we're looking at. And you got the weekly chart. Take a snapshot of the screen out here. I'm not saying to sell your position out here, but I am trying to express to you this is really up against resistance. I don't know which way this is going to go, so pay attention to those numbers out there, and I hope the explanation of the A to B equals CD pattern helped you out. And Greg, thanks much for joining us so early from Portland out there. Let's go to our next request coming in from GT. He wants to take a look at the 2-year note futures out here. So let's pull that up on our screen out here. And what do we see here? Well, we can see that price is trading above its green oscillator and change line. It is trading above profile resistance. That says it wants to go tackle its recent highs. That recent high out here is going to be up at the 104 level, even Steven for the most part, maybe even get up to 104.01. The weekly time frame chart here is trading above profile resistance, so adds the idea on the daily chart that we should see a future rally. And I'd have to go to the continuous contract to get any kind of data for the monthly time frame. The weekly and the daily are enough for us out there, so GT looks like 2-year note futures want to continue to move higher. Let's go take a look at natural gas out there. So natural gas, we were taking a look at the October contract. To the best of my recollection, I looked at this just a couple of days ago. Maybe it was yesterday or the day before for one of our listeners, and who was looking to get into a long position of natural gas. So this does have a Rhodes Momentum Indicator signal that has been triggered. It's been triggered about 4 days ago. Today could be a bullish reversal candle. It'd be referred to as the bull separating candle out there. So that would give you, on a daily time frame, a Rhodes momentum indicator bottom. The weekly is likely to form a TD9 count bottom pattern this week. Now, that pattern may close next week. On a monthly time frame chart, we can see the October contract has pulled back and is testing its breakout level, $2.87. So if you are looking to take a long trade in natural gas, now is the time to do it. If you're doing it via UNG, and if natural gas closes below the October contract, if it closes below $2.73, then you would go ahead and jettison that position. Now, I have no idea whether price is going to be able to take out profile resistance or not. Now, first level is 2.903. The next is the sell zone. That's between 297 and 301 out there. But when you take a look at this set of charts here with regard to natural gas for its October time frame, you got bottom on the daily, you got bottom on the weekly, and you've got found support at its breakout level on the monthly time frame. It doesn't get much better than that. Well, it would get much better if we didn't have to deal with profile resistance levels, but thank God you and I have this information because it provides us with a competitive edge. And as far as I know, a competitive edge is a great thing to have. That's why I carry a 2-iron. Steve Rhodes with TFNN. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got the ticker symbol for CVM up on our screen. This is for both Brent and Dan inside the Tiger's Den on a daily time frame. This negated a TD9 count top. The TD9 count top went ahead and completed yesterday. That was a bar following bar number 9. And if we close above that high from yesterday is $11.96. If we close above, we're at $12.34 right now. That suggests we have a strong momentum move to the upside. This also has a confirmed A to B equals CD pattern, but it doesn't have the volume behind it. The C point out here was a trading session of July 28th, 1.4 million shares. We passed this with the total of 330,000 shares. Yesterday we did, yesterday was 330. The day before was 280. Today so far in about 2 hours of trading, 133. So about 300,000 shares. Nonetheless, the A to B equals CD price projection level is at $15 and change out there. I just moved it. It looks like maybe about 15.30. The move higher is supported. Now, this has been moving higher for quite a number of days out there, 5, 6, maybe 7 trading sessions to the upside. If we look at the weekly time frame is also trading above a swing point. That swing point had volume of 4.1 million shares. So far for the week, we're at 745. So we're taking out swing points with lighter volume. The real issue for CVM, Brent and Dan, is going to be the top of the monthly profile. It is a bearish structured profile, and 1427 is the end number. I would say that we're going to go target that 1427. That's what now we are in a sell zone. So hold my horses here for a second. The sell zone is between 1120 and 1427. I still think that the way that this is traded on the daily and the weekly is that 1427 is in the cards. Now, if you can close above 1427, then things get really interesting to the upside. But one thing at a time. So Brent and Dan, that's what we see when we take a look at CVM. Yes, it negated a TD9 count top. Yes, it's got an A to B equals CD pattern on the upside for its daily and weekly, albeit on light volume. And we know at 1427, we're really between the 11 something and 1427. We've got a sell zone on that monthly time frame. So I hope that helps you out. GT wants to take a look at FXI. We're not going to take a look at the Australian dollar, but those that trade FXI should always pay attention to what the Australian dollar is doing. Those two are very directly correlated. Now, I don't know what the Australian dollar is doing. Maybe somebody in the den could take a quick peek at it. Is it trading to the downside? If we take a look at FXI, it most certainly is. Gigantic, ginormous gap on the daily time frame. Look, I'm not going to spend a lot of time on the daily chart right now, other than to provide GTE with the level where a counter trend move would end if this is only a counter trend move to the downside. And GTE, that's between the price level of 37.65 and 37.90. So if FXI gets below 37.65, you know you've got something more than a counter trend move. Odds favor. We do have more than a counter trend move, but we don't know until we get there. But the weekly time frame chart looks like it's going to confirm a Rhodes momentum indicator top, and prices below its oscillator and change line at this moment in time, it's lost its momentum. Now we've got another level on a weekly basis where a counter trend move would come to an end, and that's between the level of 36.47 and 37.23. Now, so let's just take the 37.65 off the daily and just kind of move it to the 36.47 number out there. That's the ultimate. On a monthly time frame, you're going to get bar number 8. Yeah, I mean, this would have to really fall off the face of the earth by Friday for that not to happen. What I mean by that is that on Friday, for as long as price closes above 33.86, you'll get bar number 8. The question is, will you get bar number 9? Well, next month, what price has to do in order to get that needs a close above $35 even Steven. So you definitely got a top on the daily. You definitely have looks to appear to be a top that is forming on the weekly time frame, and that's suggesting lower price. Watch that 36.47 to 37.90 level out there. So GT, hope that helped you out. Tom G writes in, wants to take a look at NVIDIA. The question is now the time to short? Now, I believe NVIDIA is out with earnings after the bell today. Is that correct? I'm just asking the question. Somebody's going to have to whisper in my ear or right inside Tiger's Den. So NVIDIA, here's what we know about NVIDIA. It's got two tops. It's got a daily top and it's got a weekly top. The weekly top is a TD9 count top, 184.48. Now, the bar following bar number 9 actually completes this week. So there's a potential, especially with NVIDIA coming out with earnings, that you could complete the TD9 count top as price moves above 184.48. Right now, that's the existing resistance level, but the real resistance area will be the high of the weekly chart come the end of Friday. The daily time frame has a Rhodes momentum indicator top, and that would only be negated with a close above 183.30. Price is trading within a new profile. It's a profile that formed yesterday. The top of that profile is up at 183.02. So it looks to me like maybe that's where price wants to travel to. And Tom's asking a question, is now the time to short it? What I'm going to do, look, all that I can share with you, at least at this moment, Tom, is your back. NVIDIA's back is up against the wall, 183.30. That doesn't mean it's going to fall off the face of the earth. And look, if performance is bad, support may hold at 173.07. Price is not broken through. It's got that TD9 count top for a while, a couple of weeks out there, and it hasn't been able to bust through any levels of support. So, it's now the time to go short, and you got that weekly pattern. I wish it were a completed TD9 count top. It's not, so, that's where the hesitation is coming. What I will do, Tom, is during that next break, I'm going to put up the intraday version of the NVIDIA charts. We'll just see if they've got any signals that we can take a look at. In the meantime, let's go on to our next request coming in from Dan inside the Tiger's Den, and he'd like to take a look at GTM. He likes this longer term, or is thinking about this longer term. So, Dan, on a longer term basis, what GTM is has been contending with for a number of months out here. In fact, we can go back to when this profile formed, October of 2024. It's dealing with its sell zone, and that sell zone is between the range of 1139 to 1233. And if the price can close above that level, 1233, it was tested a couple of different times out there. That's going to be a beautiful thing. That's what you're looking for longer term. In the intermediate term, what you'd like to see is price to close above the top of its weekly profile. That is being tested as we speak. It was tested 2 weeks ago. It was tested last week. It was the volume. The top of that profile is 1077. So you're looking for a close above 1077. If you get that, then you are likely to head higher. What else can I see on this chart out here? The other level of resistance is going to be 1284. So if price can take out that profile resistance level, then you'd be looking for a run to the 1284. That would be the next battle on a weekly time frame. The daily battle exists between support and resistance with inside its profiles, and that's between the range of 977 at support and 1101 as resistance out there. So that's what's going on, Dan. We take a look at GTM. Why didn't that bottom portion of this chart complete out there? That's weird. Steve Rhodes with TFNN. We come back to this break. We're going to look at LEU for Jambalaya, BLDR for Snowball, and any other requests that have come in. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. I've got the NVIDIA intraday charts out here. So the 130-minute, and the question is there any tell out here? So we're looking for short signals. So the 130-minute time frame chart has a TD9 count top that's in place. That TD9 count top would get negated with a close above 181.95. The 65-minute time frame chart, price rally right back in the TD9 count breakdown resistance 182.50. That can be a top. The 30-minute time frame chart needs a bearish reversal candle to confirm a Rhodes momentum indicator top out there. 195-minute chart does not have a topping pattern. So still kind of getting wishy-washy signals with regard to NVIDIA out there. But if you did want to take a short trade out here, I know you're more of a shorter-term type trader, watch that 180.35 level should price, in fact, pull back. So that's what's going on with regard to NVIDIA on those intraday charts. Let's try to find, I think, where did it go? I think it's right up here. Is that right? Nope, that wasn't it. Son of a gun. Where did Stevie put that last request where I left off? Shoot. Was it here? Here we go. LEU. This is for Jambalaya inside the Tiger's Den. So LEU, Jambalaya, has got a bullish profile change in trend. This will be day number 2 above the top of its profile out there. So that's at 196.03. Looks like that wants to continue to rally. The weekly time frame chart is on board with that idea. As soon as price can close above its oscillator and change line. And that number is at 206.14. We're at 205.97 right now. The monthly chart looks very good. I don't see any kind of a topping pattern out there. If it were to close to the downside by the end of the month, by Friday, on the monthly time frame chart, that would be a key reversal candle, and that would then confirm a Rhodes momentum indicator top. We don't have that as we speak right now. So the daily says I'm on higher price. The weekly says I'd like to join you there, but it's got to get above that oscillator and change line, Jam. So I hope that helps you out. We're going to take a look at BLDR for Snowball. So let's get those set of charts up on our screen out here. And the question is now the time to be short? So here's what we know about the daily time frame. It's in a bullish breakout mode. It is trading above the top of its daily profile. It's trading above its green oscillator and change line, likely to rally further. The weekly time frame chart, price is above the top of its profile, 135.20, without any kind of a topping pattern. It's above its oscillator and change line. It happens to be red, not as strong as a green one like we have on the daily. So the weekly chart is saying that's not giving you a short signal. And now to the monthly time frame chart. If there's a reason to go short, then it would only be coming from this chart here. Now, we haven't looked at intraday charts out there, but 144.91 is profile resistance. We've gotten up to that. This would be the third month in a row to the upside out here. The last time we had a 3-month rally, we pulled back for a while out there. The last time we had that 3-month rally was September of 2024 out here. So we're going to finish August of 2025 with a 3-month rally. I'm not seeing a ton of reason to be short out there. What I would say is, if price closed above 144.91, probably not the best time to be short BLDR. So still bull. I hope that information provided you with insight, at least from Stevie's view, as to what the charts are communicating to you and I. SAT-P wants to take a look at CrowdStrike. CRWD is a ticker symbol. Let's get that ticker up on our screen out here. And SAT is looking for some type of bottom or the ability to add to his position out here. I do see a wave number 7 bottom that was confirmed on August 21st. And price right now is trading with inside its daily profile. It is equally balanced. That means the center is pretty much in the center at 422. The top is 432. The bottom is 412. You'd have to say that is a pretty centered profile out there. So we're just consolidating there. The weekly time frame does not have a bottom pattern. You will form bar number 8 today or on Friday, but last week is the low of the pattern. So I would wait on CrowdStrike. Why? Because you got a monthly TD9 count top. Price is below its oscillator and change line. It may have found support at the top of the profile, 404.63. But I would be patient and wait here. I'd be patient and wait. So I said that once. I said that twice. I won't say it a third time. Maybe I did say it a third time. Let's go take a TEAM. Another request from SAT-P, also looking to possibly take a position here. So this did form, or did it negate it? The low of the TD9 count bottom was 158.02. The close was 158. So I don't have a TD9 count bottom. I just have a consolidation with inside its daily profile. Now, we might have a buy the D point bottom. Well, we most certainly have that. So this does have a buy the D point bottom that was formed with that Three River Morningstar candle formation on August the 13th. You have price that is trading with inside its profile out there. Also fairly equally balanced. 159, 166, 173 out there. So your buy point that would be around the 163.52 level on that daily time frame. The weekly chart does not have a bottom pattern out there. Price did pull back to the 155.37 level. Didn't get all the way down there 3 weeks ago. Got down to a low of 156. So pretty close. But still no real bottom pattern, and none on the monthly time frame either. The monthly time frame is taken on a swing point from back. Let's take it on a couple of swing points. First, it's taken on an A to B equals CD down swing point from April of 2025, had 52 million shares. If we close below that low is 173.46. We're at 171 right now. The volume is 57 million so far for this month versus 52 million. So team on a monthly basis is getting ready, potentially, if it closes below 173.46 on Friday, it's going to generate a monthly A to B equals CD pattern to the downside. Yikes. So that's what I've got. So no, I'm not seeing a place to take a long position inside of TEAM as we speak. In fact, if we do get that confirmed monthly A to B equals CD pattern, screw the idea of 163.52 as being a place to take add to some shares out there. So hope that helps you out. Let's take a look at a request from Mohammed. He wants to take a look at SLAB. SLAB is a ticker symbol. This is printed out at 140.45 out here. On the daily time frame, we have a gap to the downside. It looks like this is a sell the D point gap. This suggests, Mohammed, that SLAB will make its way back to its oscillator and change line, 136.62 out there. The weekly time frame had a TD9 count top out there. Price moved back. It got below profile support. It has regained that profile, but it's trading lower. I think the daily right now is controlling things. So watch 136.62 out there. The monthly time frame chart, prices trade above profile resistance at 129.63. So that's a bullish signal out there. I think you just got maybe a short-term correction. Now, this is going to be day number 3 to the downside. But as we look at its daily cadence out here. We can see 3 days to the downside, 5 days to the downside, another 3. So maybe this is really going to pull back and test that 136.62 level. That's what I would be watching for, Mohammed. Hope that provided the information you were looking for. And lastly, you wanted to look at lemonade. Now, I don't know if it's lemonade. It's LMND out there. So Stevie will call it lemonade. And lemonade is trading below the bottom of its daily profile out there. That's not a good scene. So you've got a TD9 count top. Today's bar number 7. Maybe you go on and form a TD9 count bottom pattern between tomorrow, Thursday, and next Monday out there. On a weekly time frame, price may be pulling back to test support, and that would be at 48.15, anywhere between 45.40 to 48.15 out there, Mohammed. So thanks for your request this morning, and when we come back to this break to finish out the show. It looks like we're going to look at CSX and the GDX. Steve Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We're looking at the charts here for CSX, the railroad company out here, which for its daily and its weekly time frame both have tops out there, Rhodes Momentum Indicator tops, and well, not on the weekly time frame. First, GTE. The key number to be watching today, tomorrow, The next day is going to be 32.29. So prices kind of stop where it did. Why did it stop where it did? I'd have to go with the bottom of the weekly profile, and that's at 32.29. If we close below that 32.29 level on Friday, it likely signals that we move back to pull back the bottom of its monthly profile, 30.57. I've got no bottoming signal on the daily time frame. The weekly time frame could be a bottoming signal as it holds that level of support, but we really need to see how the week progresses out here. So that's what I see. GT, hope that helps you out with regard to CSX. Let's go take a look at the GDX out here. So with regard to the GDX is bullish on its daily, its weekly, and its monthly time frame. Now, the weekly time frame does have a wave number 7 signal. The earliest at that top could be confirmed would be next Friday. A bearish reversal candle on a weekly basis would confirm a Rhodes momentum indicator top. The same is true for the daily time frame. The daily time frame, the weekly time frame, the monthly time frame are all traded above their green oscillator and change lines. Those are key levels of support, no spin, and they're traded above profile resistance levels. In other words, the GDX is in full breakout mode for these 3 time frames. Maybe you're going to get a 2-day pullback out here, today being number 1. Watch the green oscillator and change line at 60.14. Does it matter if price closes below that level? No, it would just tell you that it would have lost its momentum. So the GDX is long and strong. The weekly is the one that just says, just be a little bit cautious, but that caution sign will really come out if we get a bearish reversal candle on the daily time frame. So, folks, thanks so much for all those requests and assisting here. I hope we can do the same thing come tomorrow morning on Terrific Thursday. In the meantime, stay tuned for all the great programming. Have a wonderful Wednesday, and I'll look forward to seeing you again soon. Take care and be safe out there.